Altcoins are breaking out with one pumping 110%, and Sui has surprised everyone with this recent post. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. We have a new exclusive campaign with Bybit with up to $81,000 in prizes. You can now earn up to $30,000 just based on how much you deposit and trade. We're also launching our brand new trading competition with up to $51,000 in the prize pool. The idea is super simple. The more you deposit and trade, the more you earn. To find out more, just click the link in the description below. Bitcoin spiked through $31,000 today as nearly $6 billion in open interest expires today. Bitcoin price performance improved into a key quarterly options expire event, the second largest in Bitcoin's history, with analysts keen to see how this affects the markets. And just like that, soon after writing this, we did see the effect on Bitcoin. The US Securities and Exchange Commission said recent filings to launch a spot Bitcoin ETF are inadequate. The news sent the price of Bitcoin plunging by over $1,000 or more than 3% in just the space of a few minutes. Bitcoin hit a low of $29,500 before rebounding around the $30,000 zone. According to the story, the SEC has informed the Nasdaq, the exchanges that filed the spot ETF paperwork for several of the asset managers, including BlackRock and Fidelity, that the applications aren't sufficiently clear and comprehensive. The issue is that the filings didn't have enough detail with respect to the surveillance sharing agreements, including which spot Bitcoin exchange would be used. The asset managers can update their applications and refile, and that's what they plan to do. The SEC said in a previous ETF rejection orders that the sponsor of a Bitcoin trust would have to enter into a surveillance sharing agreement with a regulated market of significant size. A market of significant size is one where anyone trying to manipulate the price of an exchange-traded product has to trade on the same market the exchange-traded product is based on, meaning the agreement would allow the sponsor and the trading platform to identify any wannabe market manipulators. Solana's Cardinal protocol is winding down operations due to economic conditions, nearly a year after raising $4.4 million to improve NFT utility. According to an announcement on Twitter, withdrawals should be made by August 26. Cardinal Labs was an infrastructure provider dedicated to supporting NFT use cases on the Solana network. Based on the closing schedule, part of the operations will be halted on July 19th, including staking pool creations, token management, NFT rentals and rental extensions, social media handles, and new deposits. Withdrawals must be completed by August 26 when the 2-month notice period will end. Cardinal's team on Twitter said, "We've done our very best to navigate this incredibly difficult macroeconomic environment since we began building 18 months ago, but like for many others, it has been challenging," adding that while NFT-based products have seen some real traction, they remain stuck in the context of the crypto maximalist community. In July 2022, Cardinal raised $4.4 million in a seed funding round led by crypto venture firm Protagonist and Solana Ventures, along with Animoca Brands, Delphi Digital, CMS Holdings, and Alameda Research. Another $750,000 was raised from Neo Ventures in a pre-seed funding in 2021. In total, Cardinal secured $5.2 million in funding over the course of 18 months, with over 65,000 NFTs staked on the protocol as of July 2022. Despite challenging times, the NFT market seems slowly maturing. The NFT market had a good start to the year, with Q1 2023 being the best quarter since Q2 2022. Although March saw a decrease in trading volume, the overall performance remained strong due to intense competition among NFT marketplaces. The native token of DeFi protocol Compound has surged by more than 50% in 4 days, following a spike in volume and outflows on Binance. Comp was trading at $56, doubling its value from a June 10th low of $22.89 and rising by 51.4% since Sunday. Look On Chain noted that one particular wallet deposited $3.5 million worth of Tether to Binance on June 26 before withdrawing 50,000 Comp tokens worth $2.26 million on Wednesday and an additional 120,000 tokens worth $5.5 million on Thursday. The inflow of stablecoins and outflow of Compound tokens indicates that this particular wallet has been steadily accumulating the DeFi token. Several altcoins have been rallying recently following Bitcoin's charge back above $30,000. The likes of Blur and Arbitrum posted double-digit gains earlier this week as Bitcoin and Ether consolidated, indicating a positive shift in sentiment after 3 months of low volatility trading at range lows. Bitcoin Cash continues to rally at a breakneck speed in the wake of Fidelity and Citadel-backed EDX Markets' decision to debut on June 20th, with BCH being one of the only 4 tokens available for trading on the exchange. The cryptocurrency has jumped over 30% in the past 24 hours to a 14-month high of $320, taking the cumulative gain since EDX Markets debut on June 20th to 183%. The latest price surge is backed by a notable increase in trading activity on South Korea's most prominent digital asset exchange, Upbit. Data tracked by CoinGecko shows the Bitcoin Cash and Korean Won trading pair listed on Upbit has registered a trading volume of $557 million in the past 24 hours. That's nearly 3.5 times the volume of Bitcoin and the Korean Won pair on Upbit. Data shows the enthusiasm generated from Bitcoin Cash being offered by an exchange backed by prominent institutions has reached the Far East. EDX Markets decided to offer Bitcoin Cash, Bitcoin, Ether, and Litecoin for trading at launch because these cryptocurrencies are considered safe from the viewpoint of being compliant with the US Securities and Exchange Commission. Coinbase said on Wednesday that Coinbase Advanced, its trading platform aimed at more sophisticated traders, will offer up to 4% rewards on the USDC that they hold on Coinbase or any USDC they hold on Coinbase orders. Coinbase launched 4% rewards on USDC for all Coinbase customers on June 15th, adding the caveat that the rate is subject to change and can vary. According to an FAQ article, Coinbase doesn't lend out the USDC in its customers' accounts, claiming that it has no right to use those funds. USDC Rewards is a loyalty program that is funded with Coinbase's own funds. The program is designed to incentivize more of our customers to use Coinbase services to store their USDC. The 4% yield offering is significant because it rivals what major banks give in terms of APY for their high-yield savings accounts. Coinbase Lend, a program that faced regulatory hurdles and was ultimately abandoned due to its threats of legal action by the SEC, had initially planned to offer traders a 4% APY on USDC as a reward. Although the program was announced in 2021, it was later canceled. Lend, which is unlike what Coinbase is offering now, would have loaned out the USDC in customers' accounts to verified borrowers. If users had chosen to participate in the program, there was a potential risk that the funds would no longer be held under Coinbase's custody. Coinbase said this is a wholly separate offering from Lend, as USDC holders on Coinbase receive the reward simply for holding USDC in their Coinbase accounts. As Coinbase's Ethereum Layer 2 network base draws closer to a mainnet launch, the cryptocurrency exchange said on Wednesday that its technology has been extensively vetted by security researchers. More than 100 people recently pored over the network's code as part of an audit contest. And across various parts of the network's architecture, experts couldn't find any major flaws. Coinbase said the more eyes we can get on the codebase, the better. We are happy to report that there were no significant vulnerabilities discovered. Coinbase's Layer 2 network is being constructed in collaboration with Optimism, known for its use of optimistic rollups to help scale Ethereum. Base uses Optimism's OP stack, and its mainnet launch is expected to come sometime in 2023. The Sui network has drawn up the Sui token release schedule just a day after the team behind the Layer 1 blockchain and smart contract platform dismissed allegations that they unlock staking rewards and dump them on Binance. Sui said the decision to share details of the schedule is in the interest of transparency and open communication about tokenomics. According to stats shared by the protocol, the Sui token distribution is scheduled to take place over the next 7 years. So far, only part of the allocation for sharing subsidy, community access program, and community reserve has been unlocked. On the other hand, the allotment for early contributors and investors will be initiated from April 2024. Sui tokens will be unlocked in 2025 in the treasury of Sui network creator Miston Labs. Sui was originally developed to run the now defunct DM project in Meta. Its native token saw a massive 2,000% increase in its listing in May after the presale. But it later dropped 50% from its previous high due to rumors of dumping. The claims were first made by a user called DeFi Squared, who said the Sui Foundation was dumping rewards from locked and non-circulating staking Sui on Binance. The foundation quickly refuted claims and said the Sui Foundation has not sold any staking rewards or any other tokens from locked and non-circulating Sui on Binance or otherwise. We have a new exclusive campaign with Bybit with up to $81,000 in prizes. You can now earn up to $30,000 just based on how much you deposit and trade. We're also launching our brand new trading competition with up to $51,000 in the prize pool. The idea is super simple. The more you deposit and trade, the more you earn. To find out more, just click the link in the description below. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.